Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, May 24th, 2016. A lot going on today, so let's just dive into the charts. I figured it'd be a lot better to do a video overview versus a static charts, so I could do more of a broad-based overview of today's market action. We'll start out here with gold. Gold seems to be one of the more popularly traded vehicles, gold or the mining stocks. Nothing really to be said or added to gold other than, since my recent comments, this one just continues to play out. Textbook, the bearish rising wedge pattern, breakdown, impulsive selling. Gold is now closed down every single day. As you can see these red candlesticks, I have it set to show, if they're red, it means we closed below the previous day's closing value. So far every single day down, beautiful wedge. We're coming up on that first target there around 116, and depending on the momentum, and keep in mind we're near term quite a bit oversold, although we got quite a bit overbought on the upside, so anything can happen. And again, I just keep an eye on this chart. Personally, I like to trade the miners in lieu of gold because you have more of a essential leverage play. So we'll watch gold. In other words, if gold hits 116 support, we'll keep an eye on silver. And if the miners come up on their targets at the same time, then you might want to lighten exposure. Otherwise, we could see a move down to this 114.20 area. But right now, that's my preferred target. I expect some sort of reaction around that 116 level, even if it's only temporary. And the other shiny metal, here's silver, SLV, ETF. We're looking at a daily chart as we just were on GLD, spanning back 2 years. This is a long-term downtrend line off the 2011 highs. And silver might need to backtest this downtrend line. We recently had a breakout, a big gap above it, powerful move. And if you notice what happened today, if you take a look at this horizontal line here around 1558-ish, give or take, we had that previous reaction high that was just about, if you look at this downtrend line on a weekly chart, we were right at that downtrend line pretty much, and then we gapped above it. But those reaction highs, that should have been support because that gap was backfilled, and we went through there. So we backfilled the gap. As a matter of fact, last week, you can see here on last Thursday, we had a reaction, a very weak reaction, very weak bounce. Keep in mind, normally gaps, once they're backfilled, you can almost, 9 times out of 10, if not more, you have a reaction at the very least. So we had a little weak reaction, and then prices couldn't even move back up to the top of the gap, went down, fell below, and closed, solidly below the bottom of that gap today. And I'm referring again to that big gap back here in April. And that level is also defined by this previous reaction high. So there's some significance beyond the gap as well. So that's bearish price action for silver, which opens the door. If silver can't recover soon, and I'll tell you right now, I don't see anything in the charts on the daily or even the 60-minute charts that tell me the metals are that this pullback is finished. Again, we're pretty stretched on the downside. There's a lot of people still foaming at the mouth to get into the precious metals because they missed the big run, and you'll see you'll see some sharp, counter trend moves. But at this point, I'm leaning towards a back test to this downtrend line, that primary downtrend line again off the 2011 lows, highs, I should say. And there it is. There's that same downtrend line. You can see it clearly there. So we're at support-ish. I wouldn't be, if I weren't already short gold, silver, the mining stocks, I wouldn't be aggressively shorting here. But I can tell you that I'm just sitting tight. And now let's move into GDX. Take a look there. Here's GDX. Let's look at the daily chart. There's that rising wedge pattern I pointed out, a very steep rising wedge pattern, and so far it's playing out as expected. So we're most likely headed down to that 2120-ish area. That's my preferred target, I call it. And take a look at the 60-minute chart. There's that preferred. I have several different time frame or different boards, I should say, on this chart here. There's that bearish pennant / flag type pattern I pointed out the other day. Beautiful action on that. Let's take a look at a few other boards. See, well, there's the one I posted the other day in the trading room. So this is just a measurement of the flagpole, which is the move down into the flag. There's the flagging action and a breakdown. And as I mentioned, I say coincidence or not, I don't think it's coincidence because more often than not, you see how these charts, the technicals tend to play out so well, whether it's Fibonacci ratios, chart pattern measurements like this, where you take the measurement of the flagpole and you add it to the highest part of the wedge, and you see that comes in exactly at my 2140 target level. So GDX, and we're looking again at a 60-minute chart here. I don't see any bullish divergence in place on the 60-minute time frame. There's not any divergence on the daily time frame. So counter trend bounces aside, I'm just sticking tight, holding tight on my short positions for now, holding out for that 2140 area. I'll cover slightly above it like I always do, cover above resistance or support, I should say. And there's some other targets. So you keep seeing these lines here as I flip through these boards. We did close at a decent support level, 2148-ish. Actually, the top line, I should put it, the bottom line is 2137. I had a support zone here. And you can see the reaction low. There's a gap right there. So a pretty decent level. And again, you can see it right here. So if GDX is going to mount a bounce, it's probably going to happen tomorrow, is my guess. And maybe short-lived. Who knows? Hard to say. But again, you have to define your time frame here. If you're trying to milk a good run, the first big pullback in the miners, which is obviously underway right now, if you try to game all the counter trend bounces, it's going to be very difficult. These things move fast. But with that being said, these are the levels. So if you're happy with your profits, if you happen to short up here, I was short all the way back here near the highs. If you happen to short up there, you can cover here. You can lower your stops at this point, trail stops down, but that's my final target there is the 2140-ish area. And I think I have some official targets on the trade. I might have already adjusted those for optimal fills. Not sure. Have to take a look at that. All right, let's move on. Before I get into the equity markets, and then we'll wrap it up there, I'll talk on crude oil. That's something else I've been highlighting recently, and a lot of interest, obviously, in crude. At this point, we'll just look at the USO chart. This is a 60-minute chart. Here's that uptrend line, wedge pattern. We had a breakdown, and we had a strong rally in the market today. Crude rallied as well, but we're still below the recent highs. And as I pointed out, I remain intermediate or shorter term bearish on crude oil, and everything is here in the charts as well as the crude futures that I posted recently. We had a wedge breakdown, showed better on the crude future chart. I don't have that pulled up right now. CL, the crude futures, minis. There's the negative divergence in place on just about everything, the MACD, the RSI, the 1333 histogram trend indicator, and we're dancing just above this uptrend line here, a potential uptrend line. We have 1, 2 reactions, really a third reaction there. So this would be the next sell signal, a breakdown of this uptrend line, and that's generated off the April 5th lows, it looks like. So there's USO, again, bearish rising wedge with a minor uptrend line here that was recently broken, waiting for a move down. So I'm still looking for a little more downside on USO in the coming days to weeks. Okay, now moving on to the broad markets. Obviously, big day today. This is the Qs, QQQ, NASDAQ 100 tracking ETF, up 2% even. As I mentioned, there's a couple things, some comments that I've had in the trading room, and I know that a lot of you that follow the site don't have time to stay in the trading room. I mentioned the other day the market has just been, over the last couple weeks, acting a bit odd, and as I stated in a response in the trading room just a couple days ago, if I weren't already positioned either long or short, and I'm net short by a good margin. I have different positions, some longs, some shorts, but mostly net short. And if I weren't already, I would have been a few days ago out of the market. Somebody had asked, is it worth shorting any bounces at that point? And just with this weird action, the super low volume yesterday, today's breakouts, and I'll go over those, they were clearly some clear, significant technical breakouts. And as I often say, price is first, volume is a distant second. It is a second, volume is important, so on face value, today's breakouts, you have to take them for what they are. Personally, I didn't do anything. I also had some things going on. I didn't plan on trading. But I can tell you that if I was in front of the computer all day, I wouldn't have done anything. I didn't There's just something about this breakout, other than the fact it did not occur on above average volume, that gives me a little pause, and I'll go over those things. This chart is busy. I'll go over a few clean boards here. This downtrend line I had for a long time, going all the way back. It's hard to see the white downtrend line. I have a lot of stuff here, and I'll try to find a cleaner board here in a second. This was a downtrend line I highlighted before, where we had this bearish rising wedge, breakdown, back test of the wedge, which also took out this, which was the primary downtrend line at the time, and we had that, what I referred to as a bull trap, a false breakout, where prices punched above that downtrend line off the highs and then failed. That was a bearish event. So I wanted to point that out because we're there back testing that downtrend line. Will it have any more significance since it's already been pierced once? It may, and it may not. We'll know tomorrow. My whole theme here in this video is what happened in the broad market today. Yes, I recognize some technical breakouts. It could change the near term and even intermediate or longer term outlook of the markets, but I'm skeptical, and I simply want to see follow through. If it's the real deal, it's only Tuesday. It's not like we're heading into Friday where you have to wait for the weekend. Let's see what happens in the next couple days here and see if today's breakouts stick. So there's that potential downtrend line. There's also horizontal resistance, which I'll get to. And this is another downtrend line, this yellow one here. I can draw an alternative. This one hasn't been violated yet. There's one, two, there's several reactions, and I'm referring to this yellow downtrend line up here. So, when you take a step back in the bigger picture, the market is still in a downtrend. We peaked back in the Qs or the final holdout. They peaked back in December, whereas the broad markets, the S&P 500, everything else peaked out in the middle of 2015. It's still well below those highs. So the trend is down, and when I do this analysis, I keep the bigger picture in mind, and that's why it may seem like confirmation bias, why I might dismiss some of these breakouts today. And again, I'm not completely dismissing them. I just haven't flipped to bullish, and I'm not chasing longs on today's breakouts, and wouldn't have been even if I was in front of my desk all day to trade. So we'll look at a couple other boards here real quick. There's that downtrend line. You can see it pretty clear here. The highs back in the Qs, which occurred back on December 2nd, pretty much a double top high. So you see the downtrend line coming in. We're still well below that. So the markets are not even at risk at this point. When I say at risk, talking from the bearish perspective, because that continues to be my intermediate and near-term bias, and longer term is bearish. So we're not at risk at all of new highs at this point, or even close to it. There's also some pretty decent resistance. You can see this horizontal line here around 109.50-ish, call it. That defined that I kept talking about that late 2015 trading range, which we broke out of. That's the big, I call it the New Year's gap. We broke down, gap down below that trading range in late 2015, and that kicked off the big selling. And we tried to enter. We did a backfill of that gap, the New Year's gap right there, and rolled over. So again, from just looking at the longer term, not getting buried in the 60-minute charts, which I've focused a lot on recently, today's move really hasn't changed anything in my outlook in the markets. There's another board there. I think that's it on the Qs. All right, let's look at the S&P. Okay, this is a SPY, the S&P 500 tracking ETF, and you can see the downtrend line off its highs. We have numerous reactions, and I always say the more reactions on a trend line, the more valid that trend line is. In my book, it takes at least 3 reactions to validate a trend line, because any 2 points can be connected at random. So you have 1, 2, there's 3, that validates a trend line. You had a 4th, almost 5th reaction, close enough for government work, and then a 6th. This was a bull trap, a false breakout. You can see prices tried to pierce above there, but closed right back on it that day. So a very significant downtrend line. Not very steep, but definitely something that worth noting. And unless the SPY can break out and make a solid close, especially convincing close above that level, the market's still in a downtrend. That's it. We had a heck of a run, but you can see since the highs back here in May, a year ago, we've made a series of lower highs, as defined by that downtrend line, and a series of lower lows, as you can see here. Prices making lower lows. that is a downtrend. And it's what I've spoke on this months back, that I didn't expect this time around to be like 2007 or 2008, where things just, where there was a waterfall sell-off. There was a lot going on back then. There's just, I won't get into too many details now, but my theory here is this bear market, assuming that we're in one, and we'll be in one sooner or later. You can't be in bull markets forever. It will be a slow, at least in the early stages, slow, prolonged, and not a waterfall sell-off, and that's what it has been so far. So, for those clamoring for new highs, we're not far from it. You just might get that. Let's measure it out here and just see. There you're at, 2.86. So that's just a couple good days. We were up 1.3% today. So let's see. But until then, until proven otherwise, the trend is down. And I'm sticking with the my near term and intermediate term short bearish outlook. But again, there's some weird price action in the last couple weeks here, so I'm not very enthusiastic. If I were in cash right now, I would probably just wait to see a reversal or some type of confirmation that we're not going to take out that level and we start moving down. If you're swing trading, you don't have to catch every penny. We're talking percentage points here. And if you're looking for another 10, 20% drop, or if you're long, you're bullish, and you're wanting to break out, looking for a breakout to new highs, look how close we are to that downtrend line. Why not just wait for that to go and be taken out convincingly as well as a QQQ. 60-minute chart while we're on the SPY. Here's that very near-term downtrend line from just back in April right here. The April 20th highs. That purple downtrend line. Couple reactions, not great. We almost had 1, 2, 3 there. And we took that out, but again, not convincing. Look at the volume. And I looked at it on the daily. We were not above average. We were at best. We were actually slightly below average volume today. So volume did not confirm today's price action. I think it's just a lot of short covering because we did have some technical bullish events. We had this downtrend line taken out on the SPY. What I didn't cover was the 60-minute chart on the Qs. Gosh, I have a bunch of them. I did mention this is a resistance level. We have formidable resistance overhead on the Qs, but we did break out. Let me just try to flip around to these boards here. Okay, so here's the recent trading range that we've been in since the end of last month, about April 26th. So we've really gone sideways for nearly a full month now in this trading range. And as I've said lately, my primary focus has been on the Qs. And we did punch above there. And we came out price-wise impulsively, but not on volume. So, strong move, 2% gain on the Qs. But you can see resistance, and these are pretty decent levels. Look at all the reactions there. That level's at 108.42. I think I pointed that out in the trading room today. And then we have 109.63 up there. So still some work to be done on the Qs, and so far there's that. If I zoom back out, you can see the rising wedge breakdown, and this is what I'm talking about. One of the things that seems odd to me recently, when you see a clean rising wedge breakdown backtest, this was textbook. Typically the move down, you do get the initial thrust, you have a counter trend rally, but I don't see this often. This, it just seemed to stop halfway through where this wedge should have played out. This wedge should have come down to at least this point. And I know the bulls are saying, well, the bears couldn't take the market down. That's very bullish. Maybe so. There's just something else here that's not right, especially with not a lot of volume. And when volume is very low, it only takes a couple big institutions to just, gun the market, blow the stops, and that may be what occurred today. This may have been just the institutions taking advantage of the low volume. And yes, the volume was up quite a bit since yesterday, but that would be a function of if, some big institutions gunned for the stops, colluded, whatever it took, hit those, took us above those new highs on the Qs, that would have triggered a lot of short covering, which would have then exacerbated the buying. When you're short covering, you're buying stock. And again, all that taken in together didn't even get us to really a high volume day. So I'm a little suspect. And there's the levels. So if we build on those gains, we'll just take it one day at a time. If we can, build up, stay up above 108.50 tomorrow, especially close up above that level, the bearish case starts to rapidly diminish. So let's just see what happens. We'll take it from there. Okay, let me wrap this one up here. Try to keep this video, close to we're almost at the 20-minute mark. SMH. There's a lot I really could point out today, but one of the things that stands out were the semis. Semis have been strong recently, and a lot of people believe if the semis are good, the Nasdaq's good. If the semis are rallying and heading to new highs, the Nasdaq will follow, and there is something to be said about that. So you have a downtrend line here, pretty well defined, nothing great, but 1, 2, 3. A couple reactions in this area, so call that cluster third reaction. So a solid breakout price-wise. Again, nothing stellar on the volume, but decent volume, nothing incredible. However, it's a case of glass half empty or half full. Now, first of all, if this sticks and we follow through, obviously bullish, but we're also at horizontal resistance. Let me pull up the SOX. Forever and a day, long before the days of ETFs, we've always had the SOX, the Philly Semiconductor Index, which is still one of the more widely followed semiconductor indices. You can look how well this resistance line is that we closed at, this horizontal level, 686. We go back here, we have some reactions from below, reactions from above, breakdown, impulsive selling, a sharp move back to backtest that level, which came in with a downtrend line. This downtrend line goes to the left of the chart. This chart goes back 2 years. Downtrend line goes much farther. An attempted breakout, which failed. Another attempt. So you can see just great. This is just a very solid resistance on the SOX. So again, glass half empty or glass half full. I see an index that's rallied quite a bit extended. We were overbought here when we pulled back. We're approaching overbought levels again. And just simply something to watch. Like I said, glass half empty or half full. If you're bearish, you're looking for a reversal off here. Certainly, could you short it here with a stop not too far above? Absolutely. Just as I mentioned today in the trading room, because I know there are some of you that are bullish right now on the site, calling for new highs. And today's breakouts, we go back to the Qs. As I said, this is objective as it gets. If you believe in that breakout and you're okay with the low volume and you think we're going to new highs, then you either go long or you add to your longs here with a stop. There should be no reason that the Qs should fall back into this trading range if this was a breakout. Maybe they come to back test it, so you don't put your stop right at that level. In fact, take a 1 minute chart, and here's what happened in the Qs today. You can see, we'll go back to 5 minute here, maybe make it a little easier. So there's your breakout. There's today's opening, the gap up, and that happened to coincide, and again, not coincidentally, with these reaction highs. So this is a key level if we come back, 106.90, we'll call it. So you put your stop a little bit below that, because if they come to run the stops, they're going to run a little below, because most people might place their stops right there, a little tight. You give it a little room, and so what are you looking at? There's a downside from where we closed today, 1.64%. If your stop is about 106.74, and if you're looking for new highs, then you're quite a bit up. So the risk reward is there. Now, not my recommendation. I'd like to see what happens. I'd like to see some follow through, but that's it. So I think I've covered everything. And if there are any questions on any individual trade ideas or a sector or an index that I didn't cover, just give me a shout out. And there's a few other things that I wanted to cover. I think it'll just go a little too long in this video, some breadth indicators and some sell signals and things that I have, longer term trend stuff, and I'll try to get that out in a static post tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.